Hey, good afternoon, folks. It's June 2nd, 2020, 3:48 Central, 4:48 Eastern. As promised, I'm going to begin with a review of the intraday CITs to help you guys get better at kind of foreseeing them yourself and tracking them. Lieutenant Eric had a question around how do you figure out CITs? Uh, Basically, each you're looking for the time series, uninterrupted time series, and just kind of looking at the troughs and the peaks, and they turn out to be important points. In addition, the crossovers with the sixth degree polynomial tend to be acceleration points. So uh, here we can see, you know, obviously, if I plugged in enough mathematics, I can actually precisely calculate what this time is. But what I do currently is, and I used to do that many years back, but most of the folks who were with me at that time, uh, they were not really the day trader types and weren't really interested in precise timing, give or to take a few people like Aaron and KM and so on and so forth. So I stopped doing that, but I used to have algorithms for that. And as I kind of recode the entire SmartP, I will make sure that we kind of develop routines and algorithms to do automatic calculation of CITs as well. For now, basically, I offer like a 58, 59-minute window, and if I shrink it, right now, if you look at it, the x-axis, I'm spreading it in every day's view. For example, this is Tuesday. I span it from Monday close to like, overnight Wednesday session to give you like a holistic and a comparative view of, how the market's been comparing to the neural. If I reduce the hours here, then these columns on the y-axis would expand and our windows will get narrower and we can get more precision that way too. At any rate, without further ado, um, so if you look at it, this is more, this, if you look at it, this angle, this seems like 45 degrees, but the rise is like 60 degrees. So in essence, if it's 45 and 45, if both the lines are 45 and 45, then it'll be precisely 11. If it's a little bit obtuse, then the rise is slower and so I picked less than 11:15 for this and kind of rough it to 11:10. um, so this was, my polarity was wrong on this one. The reason I chose this polarity, so you understand I don't like pull things out of my hat, is I'm watching the parabola decline into noon, right? So it's obvious that noon is a low, right? And now I'm seeing that the parabola declines, so the CITs have to be reversed. When the parabola is declining, then this should come out as high. So in actuality, the high happened here, okay? And this was a low, this was another low, and obviously this low, this apex here matches the low point here on the parabola. So it is going to be an inverted low, and this is a retest low. And 11:10 was 11:15, 12:15 was early at 11:58, and 1 p.m. was 12:52 to 57, low, low, and so we got series of three lows actually below the declining parabola, which kind of makes sense, but um, you know, it's not perfect science where I can nail how the CITs rotate. Okay. Obviously, the crossover has happened at this point. One way is to actually keep a look out for what the hourly closes are doing, because all this time series is based on hourly closes. And at this point, we can easily see that we have surpassed the hourly close over here, and which means the series is starting to go up. So the series stays up into 2 p.m. So now go figure why that happens, right? Because the parabola is moving higher and should stay up into 302. But we had some more supportive evidence from technical models where the probability of a higher close was greater than 95%. Okay, so if this inverts into a low against my predicted high at 302, then this series is actually going up. Okay, now this is a key CIT. I do expect some kind of a quick retest um, into this zone before the markets head higher. So that's kind of CIT review. That only took about 6 minutes, and the software gives me 15 minutes to record, so I better get going. So with that out of the way, let's look at the timing calendar once again. Until the cows come home, I'm gonna keep reminding you, this is the final wave higher from the March lows that we're tracking before top comes in June, and the bottom comes in July. So we're looking at a multi-week top in June. And when do we get the top? From the annual calendar, the date I had was June 3rd, and the annual calendar is actually available to 3-month subscribers and annual subscribers only. People on 1-month plans just get the intraday stuff and guidance on a multi-week basis, just so that you feel that, oh, what's the annual calendar, right? Or annual roadmap. So the annual roadmap, typically, I've done a study, it's off by plus minus 1 week. Mostly it's been like plus 1 week. So just from the annual calendar, it kind of precisely fits. June 3rd top on the annual calendar takes us to June 10th. And that appears as the top pair, actually, where market will start losing upside strength. However, I pointed out that we do have two equal strength CITs, June 5th and June 15th, which means we actually get a double top. In between, there is a decline. Okay, this decline may feel like, oh, it's over, but it's gonna recover. Okay, and and if you just look at the time series strength, it wanes on June 10th after hours precisely. Okay, now this is a flat series, which typically can mean something like this, maybe so that 6-8 after hours decline into ninth, and from there 6-10 after hours, and a big back down on dailies before recovering into 15th. And I think from here 16th is another rollover point. 16th is what I'm viewing as the optimal entry for puts, because options, you don't want to be wasting the time premium with this kind of action. And you know, basically from there we get the decline. Shorter term this week, if you look at it, we had the high on 30th and then the low on the next trading day. We got that on the first, and second and third are flat series. Midpoint is roughly after hours today. So if there is going to be a massive takeoff like I'm expecting, um, then that has to occur starting after hours today, most likely 7 or 2 p.m. Eastern. So we're gonna get that. Um, I think we kind of, if you just look at the time series and this dominant CIT, it's pretty powerful. It's about 4 points on the CIT scale. And just to give you a sense, the March low was 6 points on my CIT scale. So it's a pretty powerful high. And if you can imagine, 530 CIT gave a 40-point gap down on Sunday, right? So So that's what it is. But looking at the short-term neural, I can see where strength might even start to wane once we get above 3110 or so. So we'll look at that. Monthly wick cycles. Uh, we have one, two, three, four, five confirmations that we can get a larger move from the monthly wave. We've been riding this, but we really haven't seen something like this, which typically would mark a top on a monthly wave. So we're yet to see that in enough tests can a large degree wave come into play now? Yes. And just looking at this takeoff visually, the breakout move on monthlies could have started today at close. Sorry, I have to rush. I got roughly 4 more minutes remaining. Uh, Looking at the daily uh, unified model, still riding the midpoint, so no breaches, looks cool. The buy zone again becomes, any breaches of the midpoint or approaches of the midpoint, same as yesterday. And for tomorrow, I think it's kind of getting hit and miss like 3094. This is 3122.66. I think we end up shooting for these two numbers in Wednesday's bar. And another thing, I think for the top, we are going to see a touch of the upper bullish band here, and we haven't really made it. If you recall, when we got the May lows, we actually traveled below the bearish band. So we haven't really penetrated the bullish band. The day we do that, that should be the top. Okay, looking at short-term hourly waves, neurals coming together now. It was kind of tough initially, but this gap down was actually reflecting this wave down. So that matches, and now we're synced up here today, and that's 702 right here. So it is possible that market does something like this after hours before moving higher and logging 31 and plus, something like that. No changes. Suggestion yesterday was buy break of Monday highs, which uh, did not occur. And then the other suggestion is longs from Sunday last week, investors to hold. And now today I add on ticks towards 3060. And stop could be either low of today, Monday bar, or the Tuesday bar. And here's where things get interesting. We actually managed to clear the quarterly upcycle for June, and we did not, what this thing is, so we did not get a breach in the negative cycle, although after hours, the June 1st open did manage to breach it. So that again is an impending sign, although that kind of occurs on futures. This model is based on SPX cash. So, from a cash perspective, if that's where the model is valid, um, it is suggesting that we will reach 3105.76 with a high probability. I've never collated this data, but I know it's a very high probability, like greater than 95%. And we recently demonstrated that in May as well. New targets opened up. 3130 is kind of the midpoint of these two numbers. I don't think we exceed this, and then eventually 3159.38. I think market can go berserk if we exceed this into June 10th, but we're not there yet. So let's take it step at a time. And the GAN model cleared the neutral signal, and my time is running out, and the update is kind of over as well. So